Welcome to this week's video where I will be discussing the basic attributes of a 506c mortgage fund. Hi, my name is Brock VandenBerg and I am the president of TaliMar Financial and fund manager for TaliMar Income Fund I. Every week, I try to share common questions that I receive from investors. And in today's video, I'd like to discuss the ins and outs of the 506c mortgage fund. So let's get to it. So what exactly is a 506c mortgage fund? Well, it's an investment vehicle that allows accredited investors to pool their funds together in order to invest in a diversified portfolio of mortgages. These funds are typically managed by professional investment firms or financial institutions. As is evident by the name, a mortgage fund primarily invests in mortgages. The mortgages could be for single-family homes, multifamily properties, commercial properties, land. Essentially, if it's a property type, there is a mortgage fund that will lend on it. Not all mortgage funds are created equal, though. There are mortgage funds that invest in owner-occupied properties and others that invest in only investment properties. Some focus on short-term loans and others long-term loans. Some focus on certain regions, others nationally, and others internationally. In fact, there are thousands of mortgage funds, from small private funds to massively public traded funds. But a single commonality amongst all mortgage funds is that they are secured by real estate through a mortgage. The potential returns for investors in a 506c mortgage fund come from the interest earned on the mortgages. As borrowers make their monthly mortgage payments, a portion of those payments go to interest, and in some cases, some goes to pay down the principal. The interest payments collected by the fund are then distributed to the investors in the form of a dividend. But why the 506c designation? Well, this refers to a specific exemption under the Regulation D of the Securities Act of 1933. This exemption allows funds to openly advertise and solicit investments from accredited investors, those with high net worth or significant income, without the need for extensive SEC registration. Accredited investors are considered to be financially sophisticated and capable of understanding the risks associated with these types of investments. This exemption enables the fund to access a wider pool of potential investors. However, it is important to note that while this exemption allows for broader advertising, it also means that investors are expected to meet certain financial criteria and are presumed to have certain level of investment knowledge. So how does a 506c mortgage fund differ from other types of mortgage funds, such as the 506a or the 506b? The biggest difference is that a 506a and 506b fund allows you to raise money from non-accredited investors. This means that investors may not meet the strict net worth or income requirements of a 506c fund, and therefore can participate in these types of funds. The downside, however, is that the fund managers of 506a and 506b funds don't have the wide discretion to market their funds. Essentially, the fund manager has to have a prior relationship with that investor prior to that investor making an investment in the fund. There are also some other areas that differentiate these types of funds regarding reporting. So to wrap things up, a 506c mortgage fund is an investment opportunity that allows accredited investors to pool their funds, invest in a diverse range of mortgages, and potentially earn returns from interest payments on those mortgages. The 506c exemption allows funds to openly advertise and solicit investments from accredited investors. Of course, like any investment, there are risks involved, and it's essential to do your thorough research and consult a financial professional before investing in a 506c mortgage fund. Thanks for joining me today to explore the world of a 506c mortgage fund. If you found this video helpful, don't forget to give it a like, subscribe to this channel. We post a ton of great content about the mortgage fund industry, the general market, and post interviews with investors and vendors that serve this industry. Thanks again for watching.